Good morning, dear students. This is Unit 2, Class First, my Class 1 for the topic is Money Market Features and its Components. My dear students, in the Unit 2, there are 12 number of classes are to be allotted. This is the first class, and in the Unit 2, there is two topics are to be covered. One is money market, another one is capital market in detail. My dear students, if you talk about money market may be a short-term market. It is a high liquid market. On money market is within a 1 year, the particular instruments are to be changed in a particular money market, or are to be playing the duration period is within 1 year or 364 days or 365 days. But what is the definition? According to Crowther, the definition is money market is a name given to the various firms and institutions which deal in various grades of near money. Means money market is called as the name as it says. It means it is related to the some of the firms and financial institutions which deals the certain type of near money. I have to discuss in later, but this is the definition. And second definition is according to RBI, the money market is the center for dealing mainly short character. It is a short duration in a monetary assets. It is yes, it is a monetary assets. The non-monetary assets are not covered, and it meets the short-term requirement. Yes, short-term requirements of the borrowers and lenders relationship is there, and it provides liquidity. Yes, and cash to the lenders, and it is a place where short-term surplus and investable funds at a disposal financial and other financial institution individuals bid by the borrowers. And again comparing the institution and individuals and also by the government, it means the RBI stated it is a short-term requirement for the short-term requirement, and it provides liquidity or cash to the lenders, and it is a place where short-term or investable funds are to be disposal of this particular financial institution, and it is bid by the borrowers. And again comparing the institutions and individuals, and it can be made by the always covered under the purview under the government. That is related to definition of a money market. My dear students, if you talk about characteristics of the money market first characteristics is highly organized banking system. Means highly organized banking system means the money market always purview under the different type of commercial banks, and also it is under the receive the guidelines of the Reserve Bank of India, so that it is a highly organized banking system. And it is a presence of central bank means RBI, Reserve Bank of India. Central bank means it is a bankers to bank, and he can look after the particular money market instrument, so that it is called the presence of a central bank is necessary. And also the central bank is also develops the particular type of money market instruments in detail. And availability of proper credit instruments. Proper credit instrument means there are certain credit instruments are there, like as a it's a call money market, bills of exchange, treasury bills, and some of the commercial bills, and some of the negotiable securities are there, through which the proper credit instruments are there, through which the money market can be transacted. And next one is the existence of sub market. Existence of sub market means it is a in a underdeveloped money market there are different various types of sub market, particularly bill market, and are to be make out in a existence of sub market. Sub market means it determines the development of money market in a larger sense. A number of sub markets are there to transact this type of instruments. Next, ample of resources means the resources there must be available of funds to the financial institution in their type of sub market. So that is a ample of resources. Resources means if you talk about the London, the New York, and the Paris money market, it can attract the all over the world. If you talk about Indian money market, that is a less concern regarding to that type of money market, so that the ample of resources are arises in other type of markets. Next one is the existence of secondary market. Existence of secondary market means there is a active secondary market participation or instruments are covered under the particular type of money market. Means secondary market means there is a may be called as a new issue market, there may be called as a some IPOs are there, or may be called as it can be purchased and sold through the stock exchanges. But here existence means some instruments are also their presence in this type of secondary market. Next one is the demand and supply of funds. Supply demand means there should be a larger demand and supply of short-term funds in the particular type of market, and the existence can be made through large and domestic foreign trade business, and besides it can liquidity can be maintained and mounting towards the short-term periods of type of money market. And if you talk about some of the other factors means why this particular type of money market is much useful means London money market is more highly developed market in comparison to the Indian market. Other factors means if in India there is a less concern regarding the money market instruments, and we should show that some of the factors, some of the international trade agencies, trade lending capacities are also arises in this type of factors to address the particular type of money market instruments. These are the some of the characteristics. My dear students, if you talk about importance, the first importance is the growth of trade and industry. Why money market is required? To develop the trade and industry growth. Means the requirement of funds is to develop the trade and industry, and as well as the different types of national, international oriented type of operational business can be made through this type of market. Another one is the growth and development of capital market. Capital market as itself sold as a new issue market and secondary market, but the capital market is also focused under the growth and development through the money market also, because there is a short-term funds are to be generated, short-term rate of interest can prevails in the particular type of market, and the some it may be influence some of the resource mobilization of the in the capital market, and capital market always depend upon the type of development of the money market also, so that it is called as a growth and development of the capital market. Next one is the smooth functioning of commercial bank. Because the money market deals or covers under the commercial bank and financial institutions. So, and through money market, the CRR means cash reserve ratio and statutory liquidity ratio by utilizing the money market mechanism, so that it is effective control or it is a effective or smooth functioning of the commercial bank. Commercial bank is only facilitates the temporarily enjoying the surplus of funds and through realizable assets, so through this market. Second one and last one is the effective control of the central bank. As already I have stated, central bank is a banker's bank, and central bank is a central bank always helpful in the effective management of the funds, and central bank is always pumps into the new money into the particular economy, and it can be it's a new type of central bank is also a promotes the economic growth and stability, and central bank is always more focused towards the new type of business to be operate in through the different money market instrument through short term funds are to be generated. My dear students, if you talk about next one is the formulation of monetary policy. Monetary policy means there is a one policy through which it is a true indicator of the state of economic condition of a particular country. Means the government is formulating the or revising the monetary policy, and it's depending upon the monetary conditions in the particular market. Monetary policy means the through which the funds, what is the availability of funds in the central bank, and through which the base rate and the rate of interest can be determined or through which in the monetary policy can be formulated by the different by the government. And next one is the non-inflationary source of finance to the government. Non-inflationary source means a developed money market helps the government to raise the short-term funds, and non-inflationary means there is a treasury bills are to be issued, and non-inflationary means there is at the time of inflation, at the time of funds generation through which money can be borrowed from the central banks, and through which the government also forced to print the currencies also, and through which the money market instruments can be major or pivotal role in the particular type of central bank issues. Means in these issues the importance can be generated, so that it is called as a non-inflationary source of finance to the government. Next, if you see the money market instruments, if you see the money market component or instruments are there are four parts, but generally there are some other parts are there. Major there are four. One is call money market, another one is treasury bill market, another one is acceptance market, another one is commercial bill market or discount market. My dear students, I have revised this particular type of market. I can say the one is call money market, another one is the commercial bill market or discount market, another one is treasury bill market, another one is the acceptance market. My dear students, first component one is the call money market. If you talk about call money market, I have already stated it is within a 1 day. If you talk about within a 1 day, you may call it as a call money, or 1 day, less than 1 day or 1 day, that is call money. If you less than 15 days, 1 day to 15 days, that is called as a notice money. If you more than means more than 15 days, that is called as a, or interbank market, that is called as a term money. Means the call money market I have revised in three categories. One is call money, another is notice money, another one is term money. 1 day call money, less than 15 days, that is notice money, and more than 15 days, that is term money. And always the call money market I have already stated that is 14 days, 14 days. I have in previous classes I have always focused over the 14 days. It means it is varying from 1 day to 14 days, generally traded. But if you go through in detail, that you may call as it may be the 364 days or 365 days. Means the bank borrows in the money market in the following different purposes: for temporarily mismatch in the funds, and that is CRR and SLR mandatory requirements stipulated by the RBI, and to meet the demand and funds of a larger outcomes in the call money market. Means short-term liquidity position of a particular banks are to be funded through the call money market. My dear students, if you talk about some of the important points, important points means in the call money market or notice money market or the term money market, that may be the transacted in overnight, in between 2 days to 14 days, and some of the banks have to be major role in the particular call money market, may be the commercial bank, may be the cooperative bank, may be primary dealers, PDs may permitted to participate. And the time period is 9 to 5 if you say, and also time period days period is Monday to Friday also, that is your days. And some of the eligible participants also adopt some of the suggested of financial market regulation department is there or RBI is there, and they can frame out some of the rules and regulation. And call money and notice money is always executed either by negotiated trading system, NDS call, or screen based, negotiated based, quoted based, or electronic trading system, clearing corporation CCL, or OTC over the counter through bilateral communication. It means this call money market is always covered through clearing corporation, through transacted through clearing corporation CCL and OTC over the counter, and also through communication, bilateral communication between the two parties. And all dealings in the call money market may be the called as the NDS call or screen based negotiated code driven system, or separate reporting system is there. And this type of call money market is also mandatory for all OTC calls, storm money calls, and it is a platform for NDS call parties who are the NDS call membership. And these OTC over the counter, and through which deals with minimum 50 minutes, and the reporting platform can be made, and the time period is 5 p.m. for each business, and it can be decided by the RBI, and it's important to remember. If we talk about some of the advantages in the call money market, advantages are high liquidity. You already I have stated, in call money market it is a high liquidity and a high, because the duration period is very less, and it can be transaction period is very less, so that a high liquidity. High profitability means in a short period duration of period, the money can be, funds can be generated, or the rate of interest can be associated, or call rate can be associated, so that high profitability. Meet the SLR requirements means the banks and financial institutions meet their extra funds to be required as regards to the CRR, cash reserve ratio, and SLR requirements to meet this type of money market instruments. And also it is a safe and cheap, because there is a RBI, under the RBI purview, there is this type of call money market can be covered, so that it is safe and cheap, and it is a very small amount, and so that investment pattern is very easy. Assistance to the central bank operation also means without RBI it cannot be operated. Nowadays there are different other ways, means through which it can be operated, but the central bank can look after this type of call money market. If you talk about disadvantage of call money market, it is always confined to big industrial and commercial centers. Big industrial and commercial centers, it means there is a big business houses are covered under this type of call money market, and it is a lack of integration market, and volatility of call money market is very high, because it is 1 day to 14 days, so that it is very high. If you talk about operation of a call money market, there may be two types of operation is there. One is directly, another one is indirectly. Directly, there are two parties are there. One is a borrower, another is a lender. Borrower who borrows the money, lender who gives the money. Means the requirement can be met by the lenders, and the borrower is a person who borrows the money, and it's called as one type of short-term loan, and there is a interest is associated, so that it is called as a two parties are there, borrowers and lenders. And directly through telephone, and indirectly there are also two parties are there, so borrowers and lenders. And another one is it can be covered, it can be transaction through the DFHI, Discount Finance House of India, that is DFI, through DFHI. How it is possible? This is the discussion matter. Means borrowers and lenders, two parties are there. In this way, the first of all, the borrower's requirement is there, and lender who can give some of the funds, or to be provide some of the funds to the borrower holder. Means there is some of the deal is there through over phone. Means borrower and lender, two parties contact with each other through over phone, and it is a telephonic market, you may say, or it is a telephonic way of transaction they are doing, and with a certain sum of amount with a rate of interest can be determined. And after deal is over, when the deal is over, the lender issues a check in favor of borrower, and one with a sum of the rate of interest. And when the borrowers turn the issue, means turn the particular, return back the particular call amount with borrowing receipt, and the loan is repaid with interest, the lender return back the particular discharge receipt. Means two parties is there, one is borrower and lender, another one is it can be transacted with telephonic conversation with rate of interest is determined, and one is receipt is prepared. And the receipt is prepared means the lender issues a check in favor of borrower with a certain borrowing receipt. Another one is when the loan is repaid by the borrower, then the lender can return that type of discharge the receipt in turn of money, that amount of recovered. That is called as the overall operation of a call money market. And second one is, if it is not indirect way, it can be also be done through. There is also two parties is there. Another one mediator is there, that is called the DFHI, Discount House of India, Discount and Finance House of India, DFHI, Discount and Finance House of India. Means two parties is there, borrower and lender, and they inform to the DFHI, and here the mediator is the DFHI, and the borrower also informed to the DFHI, and lender also informed to the DFHI, and the DFHI can called so called as a advisor, and that advice is called as a deal settlement advisory exchange. And DFHI issues just a one call deposit receipt to the lender and receives RBI check or for money borrowed, and it is reverse take place into the lending by the DFHI. And when the duly discharged, all deposit received is surrender at the time of settlement. Means the surrender case or receiving the funds is totally purview under the DFHI, and it is advisory. Advisor can be appointed, so called as advisor is called as a DFHI. And the call money market, call money market, call loans can be renewed up to maximum period of 14 days only, and such type of renewals are recorded in the backs of deposit receipt of the borrowers. That is called overall concept of the call money market. My dear students, in the call money market, it is a short term market. There is a two ways the market can be that operation can be made. One is directly borrower or lender, another is indirectly borrower and lender through DFHI. That is the basic difference between this type of market operation. Another one is commercial bill market or discount market. In the bill market, if you talk about bills, means that is a bills of exchange. If you call as a bills of exchange or commercial bill or finance trade bill or maybe treasury bill, means a bill means promise to pay some specific amount by the borrower to the creditor. Means a bill is promised to pay a specified amount by the borrower to the creditor. Means there are two parties are there. One is a drawer, another one is drawee. Drawer who draws the bill, drawee who desires to particular bill to payment paid, that is called a drawee. And these type of bills can be bought and sold in the particular discount market. Bill market is a market where short-term bills, generally 3 months maturity is there. If it is shorter Sunday in one day, 3 months 3 days, or maybe 1 day, that is 3 months 4 days are covered under this type of market. There is a one definition is there in a negotiable instrument act. There is a bills of exchange, another one is a promissory note. These are type of bills are to be traded in type of market. Definition says, in the negotiable instrument act says, in the 1881 section 5 says, a bills of exchange is defined as an instrument in writing containing an unconditional order signed by the maker directing a certain person to pay a certain sum of money only to or to the order of a certain person or to the bearer of the instrument. That is the basic the difference of the bills of exchange. But there are different types of bills are there. There are different types of bills are there. Such type of bills may be covered under the particular type of bills of exchange. Means in the particular type of bills of exchange or promissory note, these are the negotiable instruments drawn by the seller, or is called as a drawer, or the goods or to buyer, or may be called as a drawee of the goods or the value of the goods to be delivered. Or these some are called called as a trade bills or business bill, or may be called as a commercial bill, or they are accepted by some of the commercial banks. So that the two parties are there, drawer and drawee. In this case, and the RBI has also introduced the bill market scheme in BMS in 1952, and the scheme also modified in that is new bill market in 1970, and some other type of discounting of the bills have to be coverage at the time of payment also. If you talk about types of bill, there are different types of bills are there. One is demand bill or usance bill, another is inland bill, foreign bill, another one is clean bill and documentary bill, another one is indigenous bills and accommodation and supply bills, and last one is the export bill and import bill. My dear students, if you talk about demand bill and users bill, a demand bill has no time of payment is required, and demand bills are payable immediately after some presented to the drawing. Means no time of payment is not specified. But users bill, the time is, it is called as a time bill, and after the expiry of the time period, the payment can be made. That is the basic difference between the demand bill and users bills. Means uses means that is a trade custom is there, or some time period is fixed, or time for payment is determined according to the custom, according to the uses, according to the practice. That is called as a uses bill. Demand bill, there is no time period, there is no fixed period, there is a demand bill are payable immediately and they are presented to the drawing. And second one is the clean bill and documentary bill. In this bill, the title of the goods or title of the property should be accompanied with the particular clean bill. Like an example of a railway receipt. If you are transporting your bicycle or cycle to one place to another place, and you are one preparing a booking in the particular railway, through transporting from one place to another place, and in this way the railway receipt or lorry receipt or bill of lading or documentary bill evidence can be, means the evidence of goods title is required in the documentary bill, or it is called as a this type of called as a documentary bill. Clean bill means the documents accompanying the DA bill is to deliver immediately, and that is called as a clean bill. When DA bill is become immediately after the delivering the document, means delivering the document or handed over the document is always associated with the clean bill. Another one is the inland bill and foreign bill. As already stated, inland means domestic, or foreign, it may be called as a domestic, or maybe foreign, you may call as a foreign bill, or mean outside of the country. Means the bills which are drawn and payable on a person who is residents in India, that is called as inland bill. Mean the bills are drawn outside in India or payable either in India or outside India, that is called as a foreign bill. Within the country, that is called as inland bill, or outside of the India, the bills have to be done, that is called as a foreign bill. Indigenous bill or hundis, as already stated, that is called the indigenous bankers may be called as a. These are called as a indigenous banker. These are government by the some of the custom uses of the trade bills. It means that is may be called as a inland trade, then may be called as a hundis, then may be called as a Sahyog, Namjog, Chakris, and Tanmir, Darsani, and Dhanyog, and so on. Mean indigenous bankers or indigenous bills or indigenous hundis, these are the similar in nature, or these are the unorganized way of doing their business, and they are raising a remit from finance inland trade, and so that some regulatory framework is there, so that it is called as indigenous bills. And next one is the accommodation bill and supply bill. If you talk about accommodation bill, these are the bills which does not arise the genuine trade transactions. Genuine trade transaction means a person asset a bill to help the other person to meet the financial obligations. These type of bills are called as a accommodation bills. Supply bills, these are drawn in government departments by the subcontractor. These are called as supply bills. Means government organizations or the contract payments, these type of bills are to be formulated. These are called as a supply bills. Mean a accommodation bill does not arises out of genuine trade transactions, and supply bills are generally drawn on the government departments by the contractors or suppliers of the goods or supplied to them. Means the peculiar the difference is the only the government departments nor accompanied by the documents of titles, goods, or however commercial banks lend the holder of a supply bill by creating the charge on them. These are called as a supply bill. My dear students, if you talk about some another last bill is that is called as a export bill and import bill. If you talk about export bill and import bill, export bill always drawn by the Indian exporters on importers, exporters on importers outside the India, and import bill are drawn Indian importers importing, Indian importers in India by the exporters outside the India. That is called as a import bill. Mean for export and importing purposes, the bills are to be formulated. That is called as a export import bill. But in this operation of bill market, there are two methods through which the bill market can be operated. One is the discount market, another one is acceptance market. If you talk about discount market means DFHI is there, Discount and Finance House of India, that is established to activate this market. And this market through which short-term genuine trade bills and discounted financial intermediary like commercial bank, other financial institutions have an important role in a discount of the market. If you talk about acceptance market, it refers to the market where short-term genuine funds and trade bills are accepted by the financial intermediaries. And in India, there is no acceptance houses are there. The only commercial banks undertake the acceptance houses in some extent period. That is called as a acceptance market. Another one is advantage of importance of bill market. Importance of bill market, one is liquidity. Liquidity can be easily convertible into the cash very easily through the bills of exchange. Bills of exchange, their promissory note, their liquidity can be maintained. Negotiable assets means there is a duration of period 3 months, 3 days, and there is some 6 months. Within 6 months, the transaction can be made, so that it is self-liquidating. And payment, the payment period is fixed, and if it is a dishonored of the some of the bills are there is some discounting amount is there, and investment arises, and legal remedy can be made through this type of bills of market. And high and quick yield and central bank control also necessary in type of bills market. Central bank control means there is a under the RBI purview, that is a bill market is can be operated, so that central bank control is there. Central bank control through which the funds can be properly managed in a well-in manner. If you talk about drawbacks, in the drawbacks, there is a absence of bill culture. In India, there is no bill culture. Bill culture is generally famous in outside of the country, so that absence is there. And stamp duty problem is there. There is no stamp duty in the particular bill type of market, so it is a negative point. And limited foreign trade, it is a limited foreign trade because so only few foreign exchange transactions can be carried out through the type of bill market. And absence of acceptance houses means less number of financial institutions or financial markets are to be doing such type of business. And attitude of the banks are generally changed, and difficulty in ascertaining genuine trade bills because of all the short-term market, and some of the bills have to be covered. My dear students, in this class we have to discuss the money market and some of the features, and different types of money market. There are 4 types of money markets components are there. One is call money market, another one is commercial bill market or treasury bill market, another one is and the last one is there. So in this case we have to only focus only 2 concepts. One is first one is the call money market, another one is the commercial bill market. But another 2 part is there in this way. Another 2 part, one is acceptance market and treasury bill market, and we have to discuss in later classes. That composition of money market is important. Only 2 part we have to complete. One is call money market, another one is commercial bill market or discount market, and another 2 market may discuss in next class. And if any question you may ask, and thank you.